All right. I think we're getting everybody in now. We just opened up everything, so we'll give this a little minute. But for everybody that's in right now, welcome today. Can you guys do me a quick favor here? In the chat, can you just let us know that you can see the screen and you can hear us and all that good stuff? Um, Make sure that's working. The chat's going to be the main thing for everybody today. And then, yeah, if we're getting right into this. Perfect. Thank you, sir. Awesome. Okay, so we're pretty much live here. We're right at 7. Just a couple housekeeping tips for everybody while we're in here. There is a ton of information I'm going to be throwing at you, so I do apologize in advance. There is a lot, but don't worry, this is being recorded. By the end of this, we are going to sit and have a Q&A session at the end that we can follow up with any questions we missed or anything like that. But also by tomorrow, you guys will be getting a copy of this whole webinar, so you guys can go back and recap things if you missed that as well. So the big main thing is because we have a lot of stuff to cover. Use the chat as much as you can. My partner here, Ryan, pretty much we do everything together when it comes to real estate. Ryan's going to be in the chat for a lot of it, answering questions. But there's always going to be somebody watching it. So if you have any questions on anything as we're going through, please throw it in there. It's going to help us keep this going smooth. And then if we do miss it by some reason, we'll get back to it by the very end of it and make sure we answer everybody's questions and get you guys out of here. So again, thank you guys for showing up today on this nice day. A little bit windy, but that's Saskatchewan for you. So we're gonna get into it just so I can get you guys out of here in a good amount of time. So again, welcome to the First Time Homebuyers webinar. So when you guys signed up for this the other day, you did get a message saying I'm going to give you some stuff just for being here, and that is completely true. So I do have for you guys a complete guide to buying my home book. I've developed this over a couple of years. You will get this in an email with the recording, plus you will get a copy of our buyer's guide just to recap a lot of this stuff for you, just as a thank you for being here and gives you a little bit more stuff to read up on. So again, watch your emails for that tomorrow. Uh, you'll be getting it. If you don't see it, give me a shout by Friday and I'll get it to you directly. Just check your spam folders too. So we're gonna get into this. Let's get this little action here for now. As a first time buyer, so for everybody that's in here right now, as a first time buyer, I know we hear a lot of stuff in the media. Social media is the really bad one for it. We hear it from everybody right now. If you guys are feeling any of this, let me know in the chat. Let us know that, we're not crazy by thinking this because we've all bought our first home before. And obviously, this market that you hear about is a lot more uh, crazy than it's used to be. It's just a lot more competitive and low inventory. So again, if you guys are feeling any of this, that's fine. That's yeah, it is. It is. And it's for first time buyers, it's crazy because you've never done this before. And even other people that have bought homes before haven't seen anything like this in a very, very long time. Not since at least 2007 or 2008. So I know it may seem scary and intimidating and things like that, but it's definitely doable. You just have to have the right guidance and know what to do to write competitive offers and be competitive in this competitive market. Again, that's what we're here for. So just a quick disclaimer though, for again, everybody who's in here. Uh, I'm not going to cover a lot of writing offers and things like that. This is basically to give you an idea of how to get started, the most important stuff to get into it. And then as you get into the buying process, that's when we go over a little bit more detail on what to do, what to look for, and how to navigate this market. So a lot of this is just to get our entry into it. So that's what we're going to cover a lot today. So before we get into this, I'm going to do a little bit of introductions just so you know who we are and why we're essentially qualified to give you all this information. So first and foremost, I am Andy Goddard. I am a realtor here in the city of Saskatoon. I am with Realty One Group. Our office is out in Stonebridge. I am team lead with ANC Realty, so I am part of a team. I've got a partner with me, and we've got another new agent with us that does a lot of work for us. So whether you're buying or selling with us, we have a whole team at your disposal. I'll get to Ryan in a quick second here, but Ryan is also, not officially, but he is officially part of our team. We use him for a lot of our finances, if not majority of financing. But again, like I said, I'll get into that. So, again, I've helped many satisfied buyers and sellers in Saskatoon and the surrounding areas. And I say that I am licensed in all of Saskatchewan. I live in Warman myself. So my main hub is Saskatoon. But if I need to travel, I will. If it gets out to a certain distance, then we'll kind of start referring out to other agents we know. But Saskatoon and surrounding areas is my main area. So I do live in Warman. Like I said, I moved here in 2016. However, I am born and raised in Saskatchewan, so this is my home. I live out here with my wife. We've got a son and daughter, and our baby number three is due in literally about a month and a day. So it's exciting times around here. So again, that's a little bit of who I am. I've been doing real estate for over 4 years now. It's been fun. I love it. And it's simply the best. So I'm going to put something in here for you guys. There's two links I'm going to put in a chat here. The first one is just everything about me, the Linktree account. That's my social media. That's all my Instagram, Facebook, everything you know about me. So you can follow along if you want, know who exactly I am. And the second one in there is a booking link. You're going to see this booking link come up quite a bit. And all this is if you guys have questions or want to move forward or want to know more about something, click that booking link and it brings up a calendar and you can book a one-on-one conversation with us so we can determine more what we need to do to help you out. But when it does come to real estate, there's two main things you need. Number one, you need somebody who knows the market, knows how to navigate the market. You need a good realtor to help you with that. I pride myself on that. But also when it comes to real estate, you need one other thing, especially if you don't have cash to buy a home, which majority of first-time buyers don't. We also need somebody who knows financing in and out and can get you a pre-approval and a mortgage approval. And that's why I've teamed up with Ryan. Ryan and I have been doing this for a few years together now. He's done some crazy magic for me when it comes to getting buyers approved. We've helped many first-time buyers. So I'm going to pass it off to him so he can introduce himself and then we'll get into this. So go ahead, Ryan.
Oh, thank you so much for that wonderful introduction, Andy. Yeah, what a great team we make, and you know what, Andy kind of echoed the same sentiments that I have as well. It's really a two-pronged approach, really having somebody that knows that realtor market inside and out, and somebody that can really help you on the financing side. So important to get you all the way through that home buying process. So as you can see that wonderful bald head on there, my name is Ryan. I've been in the mortgage industry here in Saskatchewan for over 20 years, almost 24 actually. I understand the market, the changes that we've gone through. We heard some ominous words there: worried, stressed, intimidated. Yeah, the market's a little bit stressful right now. So having two wonderful people in your corner walking you through every step, so important. As Andy mentioned, we are kind of primarily based out of the Saskatoon and surrounding areas. Myself, I'm in Saskatoon, Andy being in Warman with his family, but know that we are both fully licensed in Saskatchewan. So if you are looking at something in maybe a small town or something in another part of Saskatchewan, we can absolutely help you out with that. So don't feel that we are only able to help you out if you're looking in the Saskatoon market. We're able to help you all the way across the province. We understand the market well. Andy's based out of Warman, but his family is from southern Saskatchewan, down kind of in that Maple Creek sort of current area. I have lots of family down in the Regina area as well. So know that we do cover most of the province very well. I am Saskatoon born and raised. I've been married for almost 30 years. Two wonderful boys at 30 and 27. Yeah, my wife and I are celebrating our 30-year anniversary this year. So we've been, we are absolutely fixtures in the community. We are happy to help, and we know the Saskatoon market inside and out. As Andy mentioned, a couple of things that we want to kind of go through. He put that booking link on there. This is paramount. So when you get off this webinar, most of the situations that you're going to have, as you'll hear from tonight, every situation is very unique, and we want to talk to you one-on-one. So you're going to get a lot of information on a high level tonight, but we want to talk to you one-on-one, find out about your individual situations. So click that booking link, book a call with us directly to get your not only the financing but the realtor side started as well. We can start sending you properties that fit your qualifications and start making sure to find out what you do qualify on the mortgage side as well. And the other thing would be, yeah, we do have a lot of people on here today. We kind of want to talk through the slides, but know that we do have that chat box monitored all the way through the process tonight. So please put all and any of your questions in that chat box for us. What we typically find is that if you do have a question, there's usually 5 or 6 other people on that have the same question. So be brave for us, throw your question in there, and we'll do our best to get that answered quickly and efficiently for you. All right, I'll pass it back over to Andy, get this thing started tonight.
Awesome. Thanks again. Okay, let's get into this now. We'll get all the information to you guys. Again, for anybody that has jumped in and a little later, if this is recorded, so anything that you missed, anything you want to catch up with, anything you want to recap with, this will be recorded. It'll be on my YouTube channel. Plus, I'll be emailing everybody a copy of this recording by tomorrow. So keep that in mind as we get into this. So this next slide here, this one, honestly, I always think about this one, but I want to keep it in for now just because the fact that I want to give you guys an idea, but this is so condensed on what actually happens in the buying process. But I just want to give you guys a quick outline of how this looks and how the buying process works here. So whenever I get somebody who is wanting to buy their first home or get in the real estate market, I always tell them we got to learn everything we can about this. Get educated. Again, that's why we put this on for people to educate them, to give them an idea on how to get into the market. Okay. So the very, very first and foremost important thing when it comes to getting into the real estate market is getting a pre-approval. Okay. That is a mortgage pre-approval. We are going to talk a lot about that right away here, but just keep in mind there's 2 main reasons why a pre-approval is so important. Number one, obviously, is so we know exactly how much you can afford and we shop within that range. Number 2, because as I mentioned, it is a very competitive market. We want as much as we can in our disposal to write a competitive offer. Having a mortgage pre-approval is one of those things, especially when we have to have a financing condition in the offer. Because you are getting financing, you have to have that condition. So we need to show the other seller's agent that we have a pre-approval and we're ready to go. Okay, so again, 2 main things. Tells us how much we can afford, and it gives us more ammo for our competitive offer. Okay, once we have a pre-approval in hand, now we start the actual house hunting process. We talk about what you need, what you want, what's the best fit for you, and then we start shopping for homes in that budget of yours and what's going to fit you. Now, again, remember, this is your first home. Most likely, this is not your forever home. This is just to get you started in real estate, build equity, and move you up next level later on after you build some equity in this. So your first home for most of us is not going to have absolutely everything you want in a home. There is going to be some give and take, but as long as we find the right one for your budget, that's the goal. Okay, then we start building onto that. So we look for the houses. We check on the MLS. We look online. We find these places. We physically go look at them because you can only look at so many pictures. You need to feel for it. We start looking around, and then we find the right one. We then go into we write an offer. Now I do have negotiating there, and if there's a chance I can find you a property that we can negotiate on, I 100% will. A lot of the times, just so you guys are aware how the market is very competitive. So chances are a lot of the homes are going for a little bit, they're going for over asking price. So we have to be competitive. That's just part of it now. That's the reality we're in. But if there is an option to negotiate anything, I 100% do that for you. Each property is different, so each property is going to be have its own set of circumstances. Okay, just keep that in mind. But when we do get an accepted offer, you're going to hear conditionally sold a lot. So when a home is conditionally sold, that means they have accepted an offer. They're just going through some conditions. Typical conditions are financing, which we have to have. Home inspection is another one. And if you're buying a condo, there is a condo review document that needs to be reviewed and agreed on. So that is another condition. So when a home is conditionally sold, that's because the buyers, so yourselves, are going through the conditions to make sure the home is sound for you. You make sure the financing is good, make sure the home inspection is good, make sure the condo documents are good. It has to be satisfied by you, the buyer. Otherwise, we don't proceed with the purchase. Okay. Once we are satisfied with all those conditions we have, we go ahead and we remove those, and the home is now a firm sale. It's off the market, and all that's left is just waiting for possession day, which can be anywhere from 2 weeks to a month or two, depending on each property and each owner. While we're waiting for possession day, you meet with a lawyer, you sign the documents, give them the rest of the down payment, pay the closing costs, and then we wait for keys. Once we have keys released, I go pick the keys up. I meet you at your new home. We do a very thorough walkthrough to make sure there's no issues. And then you walk away as a new homeowner. And of course, as homes go, whenever you do buy a home, things happen in homes down the road. So if you ever need any help with anything, our job's never done. So you need a question with it, you call us, you ask us, we have either people for it or I can help actually myself or Ryan. I know I've gone and helped people in their houses to see if we can fix it before getting somebody else involved. Okay, so there's always people to watch out for you. But essentially that's the whole outline of it. Again, very, very condensed. There's so much that goes into it in each step. However, with us, knowing that we work with many first-time buyers, we make sure that we tell you exactly what's going on, what needs to happen, why it has to happen that way. And all you do is just sit back and let us handle everything. Okay. So anybody have any questions on that or anything else? Again, throw in the chat or book that call with us and we're happy to talk more about it. But we're going to get into the major stuff now. Okay. This is where, again, like I mentioned, we're going to have a lot of information on how to get into the buying process. Okay. This is the biggest one. And of course, that's mistake number one is not getting a pre-approval. And as I mentioned earlier, they're the two main reasons why we get a pre-approval is one, to get that, understand what your range of affordability is, know what your maximum amount is you can afford, and give us that extra option that when we go to write an offer, we can say you are pre-approved. We already got that step in place. So that's the main key to this, and plus you're not going out and shopping for homes. And I'll be as blunt as I can. It is a waste of time looking at properties without a pre-approval because you don't know if you can buy it. So that's one thing, is we don't know if you can even buy it. So now it's a waste of time because now we're wasting the seller's time, who has to leave the house to show it because they don't know. So again, I like to save everybody time, your time, my time, seller's time, and let's just get this pre-approval in place. So how do we do that? That's the next question. How do we get a pre-approval and what's needed? So for those of you who are here at the start, as Ryan mentioned, this is not a one size fits all thing. Okay. I'm going to give you guys the broad outline of what it takes and what they typically look for. However, every single person in this room and every single buyer out there is different from everybody. Okay. You've got your own set of circumstances, finances, jobs, things like that, that just because you may think you're not fit with this doesn't typically matter. Give us a call. Let us see what we can do and how to work around it for you. And worst case scenario, if it's a no, it's never just a no, it's a not right now. But here is a game plan to get you there as quick as possible. Okay. So just keep that in mind. I'm just going to give you the outline of it. So again, typically what they look for, lenders look for these three things, and all these three things have to connect to work together to make it. If one of these doesn't work, chances are you're not getting a pre-approval right away. So number one is credit. That's always a big one, especially when you're borrowing money. They need to know, how are you when you borrow money? Do you have a credit card, a bunch of credit cards? Are they paid off in time? Are they full and maxed out? Are you paying the minimum payments? Do you have loans like vehicle loans, student loans, lines of credit, anything like that? Do you have debt consolidation? Have you gone through bankruptcy? They want to know how that all is, because the more debt you have, the less of a pre-approval you're going to get. Okay, so they need to look at that. Your credit score is another one. They want to see a good credit score. Typically anywhere from 620 to 650 is a good start. Anything above that is great. Anything below that, then we got to get into different options, which we can talk about on another time. We don't typically talk about that here. So that's what they need for credit. They just need to know, if they lend you a substantial amount of money, how are you with paying it? Do you have late payments on everything, or are you on time with everything? Obviously, another big one is income. We need to know, how much do you make? How much can you afford to make payments on while still affording to live and while overcoming any debt you have? So they don't use 100% of your income. They use a percentage of it. Again, that's more for Ryan to discuss with you. But they need to know, how much do you make? So for most of us, they typically use 2 years worth of income tax statements. Again, anybody new to Canada that haven't been here for 2 years, there is a new to Canada program. So just be aware of that. This is okay. We have ways of helping you out too. But typically they want to see 2 years worth of income tax statements to see how much you make. If you work a salary job, that's even easier. We can just get a letter from your employer that shows you make this amount per month or per year and it's guaranteed. That's the best, right? That's what we want to see. Anybody who is self-employed, works commission-based sales, or works for things like Uber, Skip the Dishes, DoorDash, where you don't get guaranteed pay or hours, that you cannot use right away. It's just they don't have a baseline of how much you make. So in order to use any self-employment income or Uber, Skip the Dishes income, you have to have 2 full years worth of income statements from it in order to use it. Okay. So if you've just started there a few months ago, you can't use it. You need a full-time position that has guaranteed hours and pay, or else you're waiting 2 full years. Okay. Just a disclaimer for all of you for that. Um, so again, there's your credit and your income. And then the third and final thing, which is a big one, is your down payment. Okay. So for buying a home in Saskatchewan and in Canada, 5% is the minimum you need. So you need 5% of the down payment in order to purchase a home. Now, the down payment can affect how much you can get approved for. So if you've got good, really strong credit, really good income, and let's say based on your credit and your income, you can be approved for $500,000, but your down payment is you only have $20,000 saved up. That's good enough for a $400,000 home, but it's not enough for a $500,000. So you're only going to get pre-approved for how much your down payment is as well. So again, like I said, all these things have to work together to get you that maximum approval amount. Okay. So for down payment, there are about 3 to 4 ways to get one. Number one is the most common one is your own savings. People have saved up for a while and they have the down payment from there, whether it's in a TFSA, a typical savings account, first-time home buyer savings account, whatever, that is usually the most common one. The second one is you can use RRSPs if you have it. You can now take out up to 65,000 per person from your RSPs to use for a down payment. You don't have to use it all. If you want to mix it with your savings, that works too. The only thing is talk to your person who has your RSPs. Make sure you let them know you're going to be using it for that so they can verify that you can use it for that. And they'll also tell you what the stipulations are. Typically, you got to start paying it back in a certain amount per year. So just have that conversation with them, but that is another option as well. The third option is what we call a gift from a bank of mom and dad. So either you can get a gift for a down payment from an immediate family member. So mom, dad, grandma, grandpa, brother, sister. Okay. They can gift you the down payment. They just write a letter saying, I'm gifting you X amount of dollars. But anything past that, they can't really use. So again, immediate family members can help. There is a fourth way of getting a down payment. And that is if you are part of the Métis Society of Saskatchewan. The Métis Society has a first-time home buyers program. They give you up to $15,000 for a down payment, plus some closing costs are covered. So if anybody's Métis on here and want to know more about it, reach out to me. I've got info on everything it covers and who to talk to get it started. And then it just works together like typical mortgage approval. Okay. So again, that's the 3 things they typically look for. But if anybody thinks they may not fit one of those, doesn't matter. Reach out to us, book a call with us, and we'll go over it with you and let you know your options from there. Okay. But upon that, the good thing about it is they are underwritten. So they do get reviewed to make sure everything's all good. They review your income, credit, and your source of down payment. But they are reliable and it tells us that maximum amount, which is the biggest thing right now is knowing how much we can afford. Okay. There's one thing I forgot to mention. I know Ryan is going to mention it here in a little bit, but anybody who's got down payment across seas that are coming from a different country, that money has to be put into a Canadian bank account for 90 days untouched before you can use it. So if you have money sitting overseas, get it over here as quick as you can so you start that 90-day count. If you move money in and out from it, it resets that counter. So bring it over here, don't touch it, and let it sit, okay? But Ryan's got more info on that in a little bit here. The other thing I want to talk about with mortgage approval, if you have not so good credit, you do have the option of getting a co-signer to sign for, like with you to buy a place. So again, has to be an immediate family member, grandma, grandpa, mom, dad, brother, sister. Okay. As long as they have income and they can be approved with you, they can be a co-signer for you. They would just help you buy the property itself. There is no extra cost to it when you buy. They are going to be committed to being your co-signer for as long as you can't be approved on your own. But once you can be approved, then you can go and take them off the title of your home. That's where the extra costs come. So if you want to get them off the title of your home, you just go to a lawyer, tell them you want to remove them from your title. And it costs, I think we're around $600 to $800 to do that. So some people choose to just wait till they sell the home and then their names are all off of everything and they can go buy their next home without the cosigner. So that's an option. Again, like I said, if you need any help understanding that or want to know more about it or mortgage approval itself, book that call with us. Let us get it started for you, show you what options you have to get started. Okay. Last little bit, then I'm going to hand it off to Ryan here. There has been a new mortgage update, but now this is kind of old news. December of last year, they've changed the buying mortgage for buying for first-time home buyers. It used to be 25-year mortgages. Now it's 30-year mortgages for any first-time home buyer for any home you want to buy. Just means that instead of mortgaging for 25 years, you get an extra 5 years, which brings down the amount that you pay per month, which can increase your pre-approval amount by a little bit. Okay, so just keep that in mind. It's 35 years instead of 25. Again, Ryan can answer any questions you have on that. So we're getting on. Jennifer, that's a great question. We will cover that in a little bit here at the very end, but that's a good question. So I'm going to pass this off to Ryan. He's going to tell us he's going to tell us all about the New to Canada program. So Ryan, go ahead and take it away here.
Perfect. Well, thank you so much for all the great information. Yeah, I'll get back and answer that question as quickly as I can, Jennifer. But I just wanted to jump in and talk. I know a lot of the people that do come onto these first-time homebuyer webinars are not only first-time homebuyers, but they are fairly new to Canada as well. Now, as Andy mentioned, the three big pillars that we always talk about with getting a mortgage done are the income, the down payment, and the credit side. Now, the government and the lenders in Canada are fairly aware that your income might be fairly new, your down payment may be fairly new coming into the country, or your savings are fairly new coming in, and your credit is likely fairly newly established as well. Usually, so can be less than a year. So they've developed what's called the New to Canada program here to assist and provide different ways of confirming those items. So again, one of the biggest first-time homebuyer segments we do have, and one of the largest drivers of housing growth in Canada is our new friends that have recently immigrated into Canada, and more specifically into the Saskatchewan and Saskatoon markets. So just to let you know, we typically see somewhere in the neighborhood of 1 million to 1.5 million people coming in to Canada every year. So new immigration is a big thing, and these new to Canada programs are very, very, very important. Okay, now let's kind of jump in and talk a little bit about those three pillars and how we look at that stuff. So number one, of course, is going to be the credit side, going through and find, or sorry, the income side, not the credit side. The income side we'll talk about first. So typically new to Canada means that somebody is fairly new to Canada within about the last 5 years. Once somebody has been in Canada for a number of years, they typically already either have their PR status, their permanent residency status, or they are a Canadian citizen. And they also typically have a credit history built up as well. So those people really fit very quickly into a more of a regular program. This is for somebody that's really kind of in that 1, 2, 3 year mark and doesn't have a lot of things established yet. The applicant does have to be on a permanent residency status or a valid work permit when they do come into Canada to qualify. Now, typically the three that we do see coming in, number one would be that permanent residence. That's kind of the best case scenario. Those are great. We also see valid work permits. So at least if there is 183 days left on that valid work permit, we can use that as well. The other one that we see that unfortunately doesn't make the cut is the student visa. And the reason for that is that most people that are here on a student visa that come into Canada to study, and then they immediately go back to their country of origin. So there's not a lot of longevity in the student visa people. So they don't typically allow somebody on a student visa to qualify for a mortgage yet. They want them to be moved over. Okay. Now, when looking at the income and employment for a new to Canada borrower, the income is really looked at like most any other borrower would be. The one big thing is that they used to have a minimum of a 3 month full time employment. Now that they've kind of let that slide a little bit, they want to know that you're either working a guaranteed job that does have guaranteed hours. That's kind of the big one. Okay, so coming into Canada, if you've got a salary job, if you've got something that guarantees you a certain amount of hours at a certain wage, that absolutely qualifies. Don't worry so much about the probationary periods. Most lenders are quite okay with that. The big thing is making sure that you do have some consistent income, guaranteed hours at a guaranteed salary. Now, a couple of variations that we do see on that. Some people are coming in, especially in the immigrant community, that do have some type of a contract. So they've been hired maybe on a short-term contract for a year. So even though that does have a structured, guaranteed amount of hours and a guaranteed pay, it's usually only on a short-term contract for about a year. So with a contract income, we do want to see we typically can use them as long as they have been renewed at least one time. Okay, so if it's been renewed at least once, they're typically okay to lend on that contract income, even though it might be less than a year. One thing that Andy did mention here is, anybody that might be on a something with a variable pay, like if you're on a commission structure, if you're on like an Uber or a DoorDash, something, those are considered still to be self-employed borrowers, or anybody that started their own business recently. What they kind of look at is called self-employed or variable income. And we can use that income once you have a 2 year history on your tax returns to look at. Okay. So they want a little bit of consistency, a little bit of structure to that income. So if you've just started your business, probably don't qualify for the New to Canada program income quite yet. But once you have that business running for a couple of tax cycles, we can absolutely use the 2 year history to your 2 years tax returns to qualify that income right away for you. Okay. One other thing that we do see on the income side as well that we do get asked about, especially on the New to Canada program, is I'm here, I'm in country with the kids, but my spouse is still working abroad. Can we use that income from abroad to help qualify for the mortgage? He's thinking about coming here as well. Unfortunately, unless that income is in Canada, it is being claimed in Canada. We can't use it. So if that the income has to be generated in Canada, or there has to be a 2 year history of it being claimed on your Canadian taxes to be able to use that income. So just keep that in mind. For anything overseas, it does either have to be a Canadian company generated in Canada, or you do have to have a 2 year history of claiming that on your tax returns as an income. Okay. So moving on here as well. So the next pillar that we typically talk about is the credit side as well. And if you there we go, perfect. So for credit requirements, as mentioned, the New to Canada program does take into account the fact that most borrowers are fairly new to the country and won't have a lot of Canadian credit established. If you do happen to have a credit bureau from your country of origin, let us know that right away, because if you do have a credit bureau that we can have a look at that shows the credit history, the two that we typically see the most that do have credit bureaus are people from the USA and people from the UK. So if you do have a UK or a USA credit bureau that you can pull from Equifax, let us know that. We can use that as credit. Anybody else will have to use what's called New to Canada or alternative credit to show that. Now, what that means, if you have immigrated into Canada in the last 12 months, it is required that you do have a minimum of a 10% down payment. Okay. So if you're under the 12 month mark, what they typically say is that you do have to have a little bit more down payment at 10%. And what they use to establish your credit is a 6 month track record of the bank statements from your primary bank account. So when you immigrate into Canada, typically they will get you set up with a bank account at one of the major banks. We'll have a look at the last 6 months of your bank statements just to show that there are no missed payments, no NSFs. You're handling your account great. Once we have a look at those 6 months bank statements and show everything good, and we do have the 10% down payment, your credit is qualified for the New to Canada program. Okay, now one step further, if you've been here longer than the 12 months, so if you have been here that first year, you're showing a little bit more established, you're likely going to have a couple of credit cards, things like that on the credit bureau, which is great. But you also have a few things that you can show as well. Once you have been here over that 12-month mark, your down payment requirement drops to 5%, same as anybody else in Canada. And your credit requirement, what they use is 12 months of your rental history. So if you're renting an apartment from your landlord, what they would get is a landlord letter and 12 months of your bank statements showing that your rent has been paid on time. And we also need one other item, 12 months of any payment at all that is structured. So a power bill, a utility bill, your Sask Energy bill, your SGI car plates, your Shaw cable, anything that is a structured payment that you have made for 12 months and that 12-month of rental history, and that is qualification if you've been here for longer than 12 months. So even though you may not have 2 or 3 years of a credit card, you might have that 12 months of a bank's or 12 months of a utility bill and 12 months of rent. That absolutely works for good credit as well. Last step is, of course, if you have a couple of trade lines that have been running for 2 years that show up on your credit bureau, that's automatic qualification, and you would automatically make that credit requirement as well. So, some great ways to show you how you can, get credit established and show credit establishment even though you may not have a lot of Canadian credit cards and things like that running for the 2 year period yet. Okay, so some great ways. We've shown some great ways on the income side. We've shown some great ways on the credit side. The last piece, of course, that Andy mentioned on those pillars is the down payment. Okay, now, as I mentioned, we do have a couple of different tiers there. So if you have been here less than a year, with that credit requirement of being the 6 months bank statements, they typically want to see that you do have a 10% down payment. So they bump that down payment up a little bit. Okay. Once you've been here again for that 12 months, that first year, which most people have, you automatically will bump back to that 5% as soon as you can show the 12 months of rental history and the 12 months of a utility bill. So pretty much that cutoff is the 1 year mark. Under it, typically 10%. Over it is typically back to 5 and normal. Okay. As Andy mentioned, we can take down payment from a couple of different resources. So the first one, of course, is savings. So when you put your money in the bank, if that's in a savings account, a checking account, a TFSA, a first home savings account, anything like that, that's considered your own savings. That automatically works. Now, what the bank does is they will look at that bank account to show that the money has been in there for 90 days. And that it hasn't been borrowed from a bank loan or anything else to fill that. They want to see that it is savings over that 90-day period, and we're good to go. Okay. Couple other options that we do have. If you want to borrow from your RSPs, again, we can borrow up to 60,000 out of your RSPs tax free. What they do under that program is you borrow that money away from your RSPs. You do have to pay that back to keep the money tax free. What they do is they spread that out over a 15-year payback period, and you would pay back 1/15 into that RSP every year to keep your tax-free status. Okay, so you can borrow the money out of your RSPs, and then you just do have to pay it back over a 15-year period to keep it a tax-free status. As Andy mentioned, the old bank of mom and dad. So here in the financing world, we call that a gift from an immediate family member. So that being a mother, a father, a grandparent, or a legal guardian, or a sibling. Okay, so if you can borrow from an immediate family member, and that is a gift, a non-repayable gift, lots of families do it. We can absolutely use that as a structured income to help you out with your structured down payment to help you meet your 5 or 10%, whatever is required. Okay. Andy did mention this as well, but just to kind of reiterate, please be careful with funds brought from overseas. Again, we do have to track all the money and all the movement of that money within the 90-day period of us writing an offer. So what we're going to get is your 3-month bank statements back on that account to track any movement of money. So if it's sitting there for the 90 days and it hasn't been touched, great. That's kind of the perfect scenario. If you've moved it in from out of country, we can work with that. What we would typically see again is we would get not only your 3-month bank statements of your account in Canada, we would get the 3-month statements for your account in your country of origin and confirmation of the wire transfer moving it over. So we can work with that, but we do need a little bit extra documentation. And the big thing is, well, lots of lenders do have to go through their Canadian law requirements on anti-money laundering and anti-terrorist financing legislation. So they do want to make sure typically that money has been in your Canadian bank account for at least 30 days. So we can work with it if it is transferred over. We just do need a little bit of additional information on your previous accounts and the wire transfer. Best case scenario, get it here right away, let it sit in your Canadian account for 90 days, and you're ready to go. All right, so some great options, as you can see, for our new to Canada friends. Please let me know if you do have any additional questions on that. Throw those in the chat for me. I'm going to go back and start monitoring that as well. And again, every situation is so unique and so one-on-one. We'd love to hear from you and talk to you one-on-one. Book a call and let's kind of go over your individual situation. Back to you, Andy.
Awesome. Thanks, guys. Some great questions so far. I'm gonna keep moving on and keep those questions coming when we need to. So last little bit on the financing one, then I'm just gonna roll into a little bit of real estate stuff for you guys too. Not a whole lot, but we're gonna get you out of here at a good time. The last little bit is mistake number 3 we have with the finance side is that's using your bank. Now, I don't have an issue with banks. I mean, everybody uses a bank, whether it's RBC, Scotiabank, CIBC, what have you. My dad is a general manager of a credit union for another year before he retires. So I don't have any issues with banks. The only thing I have is that I have to do the best for my clients and my buyers. And I find so far, from my experience, the best is a mortgage broker. That's why I'm teamed up with Ryan. I've had people that work for banks on here, and I've had a few people comment about it, but I'm going to stick by what I say. I don't recommend using your bank for when it comes to getting your mortgages. Um, a mortgage broker is going to help you so much more. I've had more issues than not using in-house bank mortgage brokers, and I'll explain a little bit why. Again, I'm not hating on them. I'm not bashing on them. There are some very good people I've met through the banks. I just want you guys to understand how this is going to help you, especially in this competitive market and this fast-paced market. So here's the reasons why it's so much better to use a mortgage broker like my guy Ryan, right? Ryan has access to over 30 different lenders' products, okay? He can shop around for the best deal, much like you shop around for anything, whether we're shopping for a different house, whether you're shopping for a car, anything. You want options, you want to see what the best options are. That's what Ryan's going to do for you. If I've had people that are like, well, I love my bank and I use Scotiabank for everything. Well, Ryan can use Scotiabank, right? But then he can say, I can use Scotiabank and I can stick with them if you want. But also here is another option that has a better rate and better program and such on, and it's going to work better for you in the long run, okay? But gives you options. Again, like I said, the banks are restricted to their one in-house product. So each bank has their own product and that's it. They won't shop it around, right? Ryan works the same hours as me. Real estate is evenings, weekends, all day long. So you need somebody who's going to be there to answer questions for you when we need it. So many times, like I'm sure there's countless times that I've been writing a competitive offer and we have a question about a financing. I'll pick up the phone, I'll text her, I'll call Ryan at 7 o'clock at night or 8 o'clock at night. And Ryan gets back to me and says, yeah, man, go ahead, or this or that, and we're good. But then if somebody's using a bank and I go to call the bank at 7 or 8 o'clock at night, I get an answering machine that says, we'll get back to you in 24 hours or a business day. Well, that's pretty useless, right? So again, he can help out at any hour. I mean, don't call the guy, poor guy, at 2 a.m., please. But that's what he does, right? Banks are just typically a lot harder to get a hold of when they're closed for the day. Ryan is going to offer you the best mortgage rate and product up front. There's no need to, if you go to the bank, they sometimes give you their bank posted rates, which can be higher, and you can or may need to negotiate it down. And a lot of people don't like to negotiate. So why go through that headache when again, Ryan does that for you and gets you the best product, the best program, the best value for what you need, right? Again, Ryan doesn't work for a bank. He works for you and your best interest. Whereas if you go to the bank, they work for you, but they also are employed by the bank, right? So they're going to make sure they're happy. So it's not quite a conflict, but there's two things there they got to work with, right? You and their employer. And like I mentioned, you can call or text Ryan anytime, and banks are harder to get a hold of. So honestly, I've had a lot more issues using banks than I have obviously a mortgage broker. Like Ryan has done 95, if not more, percent of all my deals because he knows what he's doing and he does it very, very well. Right. I've had success with some banks because people say I want to use them, but I've had more issues than not. And the last thing I want to cover on this is yeah, I say a mortgage broker, but not just any mortgage broker. Right. I've had people say, I've got a friend who's a mortgage broker out in Ontario. Well, honestly, Ontario doesn't know or care at all about us in Saskatchewan. There was a person we had last year. I wrote and got accepted 3 offers for him on 3 different properties, and the mortgage broker he was using in Ontario wrecked every one of them because they just didn't understand anything in Saskatchewan and they crashed the deals. Finally, I said, enough is enough. We're talking with Ryan finally. And he went and used Ryan. And the first offer we put in and got accepted with Ryan, we walked it all the way through and he got his first home. Okay, so it's not just a mortgage broker. Use somebody that's local that knows the market and knows what he's doing. Again, I can't recommend anybody more than my guy Ryan. Okay. That's why it's so important to use instead of your bank. Now, last thing about banks, when you get a mortgage, like I said, is 25 or 30-year mortgages is the max, right? People typically do not live in their first home for that long, right? They typically live in it, build up some equity over 5, 10 years and go to sell it and move out or change of jobs, change, and you got to move somewhere. So you're going to have to break your mortgage because it's not paid out. Bank penalties can be more expensive. So Ryan is going to make sure you have little to no payout penalties when you do have to make that life change. However, we can't guarantee there's not going to be any payout penalties, but at least you're going to be aware of it and save you some money. So the recap for this is you're going to get a lower interest rate, which is lower payments, more money in your pocket when you go to sell, and you have littler payout penalties to pay when that happens. So again, we're all about saving you money and making you money. This is an investment. It's a long-term investment. We want to make sure you put more money in your pocket instead of going towards interest, which is ridiculous. Okay. So that is a lot to cover on mortgages and finances. So again, this is recap. This is recorded. You'll get it. I'm going to just jump into a little bit of real estate stuff for you guys, just to give you an idea of what else we do to help cover you when it comes to buying your first home. Okay. Another mistake people make is buying directly from a builder. And why is that a mistake? Because builders are a lot like banks. They're there to sell their product and their product alone. But my job as a realtor who knows the market knows a bunch of different builders, who offers what, who is good, who is some to avoid, and what different things we can offer and how I can negotiate things for you with a builder. Okay. I can shop you from different builders and show you what they offer. I know a lot of the builders, right? And I can help negotiate different things into it for you. And I can say, you know what? I think this builder is going to fit you better. Or instead of a new build, maybe it's better to go to a resale and we'll make those comparisons. All right. Uh, I've had people say, well, is it going to cost more if I go to a builder instead or cheaper? And the answer is no, it costs the exact same. They list it at a certain price because they have to sell it for a certain price. So whether you buy from them or you buy through a realtor, it's the same price. But the thing you're losing is knowledge of different builders and the builders themselves. And you have somebody negotiating for you. So like I said, I will negotiate for you any way I can. New builds typically don't touch their purchase price. Okay, what they have it set at is what they're going to get. But what I can negotiate for you is add-ons. Okay, so new builds typically don't come with much of anything. They come with the main house. The basement is open for development. There's typically not a back deck or back landscaping or a back fence. Some don't come with appliances or air conditioners. So you need somebody who's going to at least try to negotiate those in either for free or total, or at least get some off, right? I've had some that threw in the appliances for free. I've had some that took half off the appliances. So instead of paying $8,000 for an appliance package, we got it for four. Or an AC is $6,000 to $8,000. I got it in for again half price, right? So it's saving you money somewhere that we can. Okay, so that's just a little bit about new builds. I could go on for a while about new builds, but that's kind of a more of a later on situation. Okay, so the next thing. I see there's a ton of stuff coming into the comments, so keep going. But I'm going to add on to that, you guys, really quick. While we're answering all these questions here, please let me know for a home inspection. It's very, very important to get a home inspection when it comes to buying your first home. So can anybody tell me, and I don't care, just throw numbers out there, people. How much do you guys think a home inspection costs for a home? Just any number, throw it out there. I want to see if we're close or have an idea. Well, there you go. Yeah, we're good. Look at you guys go. Very smart. $500 is close. That's your closest one. So my guy that I highly, highly, highly recommend is 450 plus GST. That's for a typical standalone house. If it gets over 2,000 square feet or has a basement suite where he's got to test a couple extra appliances and stuff, it does go up a little bit, not I think an extra $50 or something like that. Square footage, if it gets over 2,000 square feet, it goes up a little bit, but typically it's about 470 some with taxes in for that. So again, I've had people say, well, that seems kind of expensive for a home inspection, but let's be honest here. We're buying a $500,000 house, a $400,000 house, hell, even if it's a $200,000 house, right? You're investing into something long term. $500 to know everything about the workings of your house is a very cheap thing to have because who knows what they're going to find. We can only see so much when we do a tour of the house. We can't see and test absolutely everything in the house. It takes them hours to do. We can't do that in a half an hour showing. Okay. So why is it very important? Number one, if there's a major issue with the house, there's three things we can do. Number one, we can get them to fix it before you move in. Number two, we can take money off the purchase price so you can get some a little bit of leniency and you can fix it yourself. Or number three, if it's very major and it's you don't want to deal with it, we simply walk away from it and go find something else. Okay, this is for you to decide. That's a couple things we can do. So here's really what you see on a home inspection. Okay, number one, a home inspector cannot be invasive. They cannot open up walls, but they have tools to look around and through things. So on the left there, he's got his infrared camera. So it's going to test heat and cool temperature losses anywhere. So he'll check the ceilings, he'll check the walls, make sure insulation is properly there and it's properly, the whole house is properly insulated. Okay, so they check through that. They check everything from electrical, plumbing, heating, all the major components of your house. So they check your electrical, make sure there's no fire hazards, make sure it's correctly wired and everything like that. He'll check everything that has plumbing and water running through for any leaks anywhere. And I know it's hard to see, but in the bottom picture there, he's got a moisture meter detector. He can see there's an active leak there. So we had them fix that before we bought the place. Okay. Because we're in Saskatchewan and we get very cold winters, we want to make sure your furnace is your most important thing in the house. They test that. They make sure your air conditioner, if the house has one, make sure that's functioning properly, right? They test every appliance in the house to make sure the appliances are working and not leaking. Okay. So again, they test everything. And then when I say everything, I mean everything. They go up on the roof. They look at their shingles. They go in the attic to make sure there's no leaks coming from the roof. They check as much as they can to the foundation, garages, every single thing about the house they will check. So you now know everything about the house. Any little plug that doesn't work, anything that doesn't work the way it's supposed to be or installed correctly, they will note it and let you know. So the thing to take away from this is it's not everything that they note is not major, it's minor, but the major stuff is what we focus on. So if there's a leak, if the furnace isn't working, if there's mold or an infestation that we couldn't see, or things like that, electrical hazards, those are the things that we're really looking for. We're not really going to bug them if a plug-in in a room isn't working correctly because you can fix a plug-in for $5. Okay, it's those major things that can affect you buying this property. So it's very, very important. Plus, the other thing is you're paying $500 for this. If you don't pay the $500 and we find out after you buy the place, what if your roof is leaking? What if there's mold? What if you got a cracked leaking foundation? What if? And that $500 now turned into over $20,000 to fix. Nobody wants to move into a property and spend an extra 20 grand after because you didn't get a home inspection and we have zero recourse to go fix anything. Okay, so it's very, very, very important to get one of these done. Okay. The last little bit, I see there's some great questions. So we're just about done here. So if Ryan can answer them, great. I'm gonna skip them until a bit. I got about 5 minutes, if that, left, and then we'll get into some questions and stuff like that. So the last thing I want to cover, this is the same as the home inspection. This is a condition for when you buy a property that has a condo with it. Okay, you're buying an apartment, a townhouse, whatever. If it's part of a condo corporation, you will get a copy of the condo documents. Now, this is mandatory that you get a copy of it. What's not mandatory is that you get it reviewed by a lawyer. However, you are going to be paying a lawyer to do the transaction. So I always say, get the lawyer to review it. They'll look into everything and make sure the condo is being run properly. And why is that important? Because it can cost you a lot of money if it's not ran properly. Okay. The biggest thing that we look for in this condo review document is the reserve fund. A reserve fund is the amount of money the condo has saved up in case of any fixes that need to come, right? Typically, we see anywhere around the 100,000 and up mark. We want to see a healthy reserve fund, right? If they do not have a healthy reserve fund and there's an issue that comes up like a leaky roof and they don't have enough money to fix it, they will come to each unit owner and ask them they do what's called a cash call. They'll ask you for more money on top of the condo fees you're paying to help fix it, and we don't want that, right? We want to make sure the condo is being run properly. There's a proper reserve fund, and it's healthy, okay? But this thing will tell you everything from the reserve fund, the maintenance fund, how much your condo fees are, what goes from the condo fees to where, what the insurance is on it, who does the insurance, what the bylaws are, what you can and can't do with your unit, and so on and so forth. It covers so much stuff, but at least a lawyer is going to review it, make sure they're audited correctly. Reserve fund has a study on it and all that, and make sure there's no red flags. If there are red flags, again, you can choose to walk away and go find a different condo. Okay, that's the beauty of it. But we want to make sure that you are properly properly educated on the condo that you're purchasing, especially the bylaws too. There could be restrictions on what you can and can't do with renovations. So the last thing we want is you to go in there and start ripping out a bunch of flooring and find out after that you can only put, let's say, carpet down and you've just put laminate flooring or hardwood. Well, now you got to rip it all back out. You may get fined for it. And then now you're spending like double the amount to fix it. Okay. So we need you to make sure you're okay with all that. That's not a very common occurrence, but some condos do say you can't put hardwood down or laminate. It has to be carpet. So things that we need to review when buying certain condos. Okay. That's what's there to protect you. Again, we're just here to make sure your money's safe, your investment is safe. If you don't review it, it could cost you thousands of dollars if there's a cash call, if the condo fees are going to shoot up, if you don't look at the bylaws and you do improper renovations, okay? So these are what I'm trying to get with all of these is that we're here to protect you when it comes to buying your first place, right? There's a lot of things in place to protect you as the buyer, a lot of recourse, but we just want to make sure you're getting a sound investment when we purchase this, okay? That pretty much covers most of it. Like I said, I don't get into a lot of the offer writing because every property is different. There's a lot we could touch on with that, but that's more of a one-on-one kind of topic. Again, like Ryan's got in there, book a call with us. We can go over a lot of this stuff, but a lot of it's trial and error when we go to buy a place. But this is just how to get you into it and how you're covered and protected as a buyer, especially a first-time buyer who may not know much about buying a place. So hopefully you guys feel a little bit better. I know there's not much we can do until we get into the buying process, but just know that this is how to get into it. We're here to help you get into it, and we also are here to show you how to do this competitively. Okay, there is a way to get your first home. It is possible, it's definitely doable, and it's something that we can do. Okay, so Apparently, I'm kind of losing my voice here, but I'll last little thing is this what it looks like when you go to book a call with us. So everybody who has booked so far, thank you. I look forward to talking to you. Everybody else, book that link or book a call with us. Comes up to the calendar, has dates and times that I'm available, and I look forward to having that conversation with you guys. So, so again, I'm going to now. That's kind of wrapped up for all the main stuff. But Ryan and I are going to stick around for a bit after here, and we're going to answer some questions. But apparently, I got to take a second here, and I'm going to let Ryan kind of jump in on here a little bit, and we'll get some questions answered for you.
Yeah, we're doing great, Andy. We're almost caught up here. Just a couple of the last little ones. I'm just finishing up here. Question from Aslam. What are the incentives for from the government for first-time home buyers? Do we get 10% from the government to be used as down payment for a newly built home? Um, Typically, honestly, Aslam, the big things that you get from the government on a as being a first-time home buyer, you get to use the 30-year amortization option. You can use your RSPs tax-free for down payment, and you get to use a tax credit on the tax return the year you buy your home. Unfortunately, that 10%, that first-time home buyer incentive, was discontinued about a year ago. So that is no longer an option. So those are the benefits there. You get to use the 30-year AM, you get the RSPs tax free, borrow it up to 60 grand, and you get a tax return credit on your tax return. Okay, well, next question here. How long after the purchase does one start mortgage loan repayment? Okay, great question from Dapo. So, what happens is once you write an offer, we will go through and get the mortgage approval for you. Um, once you once you take possession of the home, depending on the payment frequency you choose. So if you want to pay your mortgage once a month, if you want to pay that every 2 weeks, if you want to pay that twice a month, if you want to pay that every week, you have all those options. What happens is once you take possession of the home, whatever payment frequency you choose is when your next payment will start. So, for example, if you take possession of your home on the 20th of May and you wanted your payments to be monthly, what they do is they do what's called an interest adjustment date to get your payments on a monthly cycle. So they would say, you'll pay interest from May 20th to June 1st, and then your first full mortgage payment would be July 1st. If it is on a 2 week basis, what they would do is you would pay interest from May 20th to the Friday of your 2 week cycle, and then your first payment would be 2 weeks after that. So, really depends on the payment frequency that you would like your mortgage payments to come out of. If they're monthly, typically you would pay a small interest payment from your possession date to the start of your monthly pay cycle, and then your first payment would be 1 month after that. Hopefully that makes sense. Great question. Great question here from Tamiet Breaks. Many have their families here, but keep their jobs back home and shuttle between Canada and country of origin. They have great credit scores, and many have over 20% down payment. They file their taxes. Does the fact that the man is not yet employed in Canada affect the pre-qualification significantly? Yes, we did talk about that. So, if they are working, they are living in Canada but still working overseas, and they have claimed their income, their country of origin income on their Canadian tax returns for at least 2 years, we can use that income. If they're shuttling back and forth and they file their taxes in their country of origin, unfortunately, we cannot use that income. We have to be able to qualify that income in Canada. We have to be able to call the employers and have our lenders be able to properly verify that the income is legitimate. So unfortunately, we can't do that for a lot of employers that are outside of the country, which is why we kind of use the 2 years tax returns if that is an option. It does have to be with a major company as well. But typically, the rule of thumb is that you do have to be working in Canada. Okay, you do have to be working for a Canadian company and have your Canadian income tax, CPP, and OAS taken off at source. Okay, next question from Kevan. When applying for a mortgage pre-approval, does it make a difference whether the car is leased or financed? That's a fantastic question, Kevan. It really doesn't. The big thing that we're looking for on the mortgage finance part is the payment obligation. It's not really how long you have it financed or leased for. They both kind of count the same. Typically, it's the payment itself that it matters because the payment is what's coming out of your monthly income and affects what you're able to qualify for. So leased or finance doesn't really make a difference. It's the actual payment on that lease or that loan that we're going to use to qualify. Great question though. So yeah, to answer your question, it doesn't really make a difference if it leased or financed. We're going to use the payment either way against your debt servicing requirement. So against what you would qualify for. Great question. You guys have been absolutely fantastic. You kind of came to life there a little about halfway through. I was like, I thought, we're doing an absolutely fantastic job of explaining because there wasn't any questions, and then boom, we had some great questions coming out. Oh, another question here from Peju. Thank you so much. Is it okay to buy two houses at the same time and use one for some sort of an investment? How does that work? Yeah, absolutely, you can do that. What we typically do there is they require different qualifications. So, with your owner occupied house, typically you can use as little as a 5% down payment if you want. You usually receive best rates on an owner occupied house because it is considered a slightly lower risk product. But you can absolutely also buy a rental at that time. We can use the rental income from that rental property. The big thing on a rental property is you do have to have a minimum of 20% down payment. So you would have to have the full 20% down payment for the rental. You'd have to have the 5% down payment for the owner occupied property. So they do qualify slightly differently. Typically, pardon me, Paige, they're done at a slightly higher rate because a rental property is considered a little bit more risk for the bank, but they can absolutely be done side by side or within close approximation on time from one another. They just do qualify slightly differently. So you wouldn't be able to use a 5% down payment for the rental that you would for the owner occupied property, and you're likely going to get a slightly better rate with the owner occupied property than you will with the rental. But to answer your question, absolutely, we can do both at the same time. Question here from Precious. I've been told. Oh, this is kind of back to the home inspection. Yeah, we kind of wanted to touch on that. I did see that Andy kind of jumped in on that. Thank you so much for that. Again, we really want to make sure that you know that we are here to protect you all the way through that transaction. So, I mean, as much as it is an option for you to choose whether you go with that home inspection or not, we've seen some great. We've seen it in a great strategy when a home inspection comes back and Andy can use that home inspection to, possibly negotiate a slightly better price or some different terms on that deal. As far as the seller goes, your main question was, does it affect a potential seller maybe skipping over it? I've seen that on occasion. So, I mean, not to say that it's never happened, it has. I have seen in a presentation of offers, if there are a lot of conditions on the offer, I have seen those, not get favorable results and maybe get passed over. But, what we typically do is we try and find something that not only protects you, but we put in a competitive offer. Again, we want to make sure that you're not overpaying for that property, and we want to make sure that you're protected all the way through. What we've seen in those situations, just because the market is competitive, we still want to make sure that you're getting a fantastic property, right? So we want to make sure that just because there is a competition for it, if there maybe is a foundational issue or water seepage or water leakage or a cracked beam or anything like that, and we don't go through and do the home inspection, we may never know that. And there could be a very expensive bill if you moved into that property and were completely unaware of any of the issues that happened there. And you could potentially end up with a large bill. I've seen people that end up with foundational cracks and water damage that, I've seen it cost, 20, $30,000 to repair. So keep in mind that the home inspection is there to protect you. It's not there just as a cost or a stumbling block. It's there to really give you all the information that we can about that property so that you can make a great decision on whether this is a property for your family or not. So hopefully that helps you a little bit. I know that it's a bit of a gray answer. Having that extra home inspection condition, I have seen it get passed over once or twice. Not all the time and not even on the regular. I have seen it happen once or twice. But again, we want to make sure that we're there to protect you all the way through that process.
Yeah, I kind of want to jump on that too, really quick. I, for my job to protect you, I'll never recommend not getting one because most first-time home buyers, unless you're in construction and things like that, but even if you are, we don't know what's hidden beneath these houses, right? We won't know without an inspection. And if you don't get one and something happens, you have zero legal recourse. We can't go to the lawyer and say, look, this is here. And the first thing they're going to ask is, did you get a home inspection? If you say, well, no, sorry, that you chose not to look into it, not much we can do. It's your problem now. Also, again, I'm going to add this too. I'm not saying it as a bad way either, but it's again how important these are is that if I have a buyer that says I do not want to get a home inspection, I will have a document signed saying that I advised it, but they chose to go against it. Just in case something does come up, I'm not the one getting sued for it. Okay. That's how important these are to protect you as the buyer. And if a seller doesn't want to accept your offer because of a home inspection, well, then we'll go find a different place. But we are still getting offers accepted with home inspections on it because that's still just a pretty common thing to have when it comes to buying a home. Okay, if we start adding a bunch of conditions like home inspections and like roof inspections, furnace inspections, gas line inspections, all this just because the more inspections we put on, the harder it is. But a home inspection is going to cover majority of everything unless there's a major reason why we need an extra inspection on something. Okay. So yeah, that's just a little adding to it. I would never recommend writing an offer without one. Did you answer the question about difference of whether a car is leased or financed? I know that one popped up.
Yeah, sure. Yep, sure did.
Okay,
Yeah, you
did you?
betcha.
Okay,
Yeah, the lease or finance doesn't matter. It's really the payment
right.
that
Yeah.
we're going to factor in there. So they both kind of factor in the same.
Okay. Awesome. I think we kind of caught everybody's questions. Again,
We're good.
yeah, so I'm just gonna put it one more time. Oh, I got another one. I think maybe unless I just nope, never mind. That was just my thing. So I'm gonna put this one more time in there for everybody, and I'll just do a kind of quick summary for everybody who is still with us, and we appreciate it. If anybody has any more questions, throw it out. We're gonna stick around a little bit longer if you want. If not, we'll wrap this up. That's the booking link one more time in this one. You guys will get an email from me tomorrow. Look for it in your spam folders if you don't see it. It's going to have the recording of this so you can recap it. Our booking link again, the books for first time buyers and the buyer's guide will all be in this email with our info. So that is coming at you tomorrow. If for some reason you don't see it and it's not in your spam folder, please reach out and I will get it to you directly. But other than that, I think unless there's more questions, I appreciate everybody being a part of this with us today. Again, Ryan, 1000% thank you for being here to answer a lot of questions for us. We look forward to talking to each and every one of you down the road. And yeah, thanks again.
Bye, guys. Have a great night, and we look forward to talking to you soon.
All right, everybody, take care. Enjoy.